Good day, everyone. Welcome to Guide to Investing channel. This is a video on Apple. Is Apple a good buy at current price levels? We look at Apple stock and its current price, some fundamentals and technical analysis, and if found suitable, we'll do a buy and write strategy. Let us look at some of the key fundamentals of Apple stock. Apple stock, I'm sure everybody is aware. Either you might have an iPhone or an iPad or a Mac, or your kids might have a Mac. Okay, so it's a very, very popular company, and its current market price around 185. It's a $383 billion revenue company, and with a forward P by E of 28, which is very reasonable for a growth stock. Apple is considered as a growth stock. As per latest quarterly results, earnings per share is 2.18 versus 2.10 expected. So it has performed much better than the expected earnings per share. And revenue is at 119.58 billion versus the 117.91 billion expected. So much better than the expected results. So, but still, why did the stock move down after the results? It moved down maybe around $10 after the results in a few days. Now, one reason was the China sales were not as big as expected, but there could be various reasons. So, if you look at the financials, the results, it is overall pretty good. And gross margin, it has increased to 45.9% versus 45.3%, which is pretty good. That adds to the bottom line of the company. Apple reported 33.92 billion in net income during the quarter, up 13% from the same period last year, which is also pretty good. And if you look at a price target of around, we can look at 210 in a year's time from now. Let us look at the technical analysis of Apple. Apple, as you know, is a fundamentally very strong company, and if you can see the last 1 year graph, it has been moving up nicely, and there was some major correction out here, but it got support at this 200-day moving average. This is a very powerful support line, and you see that it comes there, it gets support and moves back, gets support, moves up, gets support, moves up. We went a little below, but again support there and moves up, and now we are again close to the support line. So basically, there's not much risk of buying Apple around this price, maybe another $10 less. But that's why we do a covered call or the buy and write strategy, which will give us an additional cushion of $10, a kind of insurance on the downside. Okay, so this is the daily chart. If you look at and if you see all the other technical indicators like MACD, RSI, and stochastic indicator and ultimate oscillator, everything is indicating a slight downtrend, but it will again reverse back. So you cannot wait for the perfect price. That's where we could go for a covered call, which will, if it goes down say $10-15, it is good. The reason is we can buy back the covered call, and then Apple will be an open stock. Again, we can sell another call. The return on that will be much higher than what we can get as of now. We will discuss those in the future videos. So if you look at the weekly chart, so let's look at a weekly chart for a 5-year period, and it's been pretty beautifully supported by this the 200-day. It has never broken that 200-week moving average, and it's a very superb stock, and that the stochastics and RSI are also in a slight downward trend, but that will be taken care by our covered call strategy. Okay, so overall it looks excellent, technically pretty good, with a small correction, maybe $5-10 maximum, and more possibility of going up. Now let us look at the covered call strategy, or it is also called as the buy and write strategy. Okay, this screenshot is from Fidelity. So if you have a Fidelity account, this will look exactly the same, but you have other account like Charles Schwab or anything else, they will look almost similar. Basically what you do in this trade is you buy 100 quantity of Apple. Apple is currently under $185. Okay, and today the market came down pretty badly, but Apple just came down only by $2, 1%. Because it's closer to its support line. So people, once it comes a little lower, the institutions and people who strongly like Apple, they keep buying the stock. And you sell to open one quantity of January 17, 2025 call at 205 strike price. I kept it closer to our target. So if we comes and closes around 200, 205, then it's perfect for us. We could retain Apple. We don't have to give delivery. If it goes beyond 205, then we might have to give delivery because our profit potential is limited at 205. But if it is little closer, then we could get maximum profit, retain Apple shares for another round of selling of a call for the next year. Okay, so we get a credit of around close to $11, and the net debit that you have to pay is 174. You don't pay 185 because of this credit you get, and you can go up to a couple of dollars up if needed. Also, if the market tomorrow could bounce back after a big correction today, so you can go up to 175, 76 also. Look at what it is showing, and then you put that midpoint. You will see a midpoint price there between the bid and the ask. You put that midpoint price. That should be definitely less than 176 tomorrow. You could get around 174, maybe between 174 and 176 range. So the maximum gain you will get out of this transaction is $3,100 because we are limiting at a strike price of 205, which is pretty good because I don't expect it to go to 300 and things like that. And the maximum loss, don't worry about it. That is if you feel that Apple goes to zero, that is Apple becomes bankrupt overnight. So if you believe so, then don't invest in Apple. Okay, so this is the covered call strategy. Let us look at the profit potential on this trade. The current market price of Apple is 185. We buy 100 shares, so we pay 18,500. We sell a January 17, 2025 205 call. That will give you a credit of roughly around 1100. So your net cost is around 17,400. There's a dividend of 96 cents. So for 100 shares, it is $96. I'm almost ignoring that in the calculation. You can take it as bonus. So dividend yield is 0.51, which we can ignore. So you will get it, but you can ignore in this calculation. If price goes about 205, which is our strike price for the call option, then the profit potential is $3,100. If the price goes about 205, the same in terms of percentage, it is 17.82%. And if you analyze the profit potential, because now we are in February, so the call strike price is on January 17, 2025. So if you analyze the profit potential is almost 20%. So this is it's very stable stock. Everybody knows about Apple. It's a very fundamentally strong stock. With this stock, we can get 20% and almost 20% annualized returns. If you like this videos, do subscribe by clicking on this subscribe button on the below at the point below the video, and there is a bell button which will give you an alert. So whenever a video is released, you will get these videos as soon as possible. Like when you log on to YouTube, you will see this videos on top. So that will give you a quick way of doing these trades, because the more time you give, the prices could change. Okay, this is a disclaimer. The recipient of this material should get their own professional advice before doing anything based on this information. This is for information. Evaluate it, think about it, and if you feel convinced, then go ahead and do this trade. And congrats and happy investing if you proceed with this trade. Thank you. And I'll get back to you with another video in the next few days.